Hello and welcome to day 12 of the trading series. So today's video is going to show you guys a trade that was placed on April 16th, 2024 for Strategy Wars. And this is going to show you a little bit of like another scalping retracement thing that I've done. I talked about this in a previous video. This is something that I do personally do because I am a little more experienced. This is not suggested for newer traders. I even wrote that in here. I'm letting you guys know now. For newer traders, going against trend really isn't recommended, and you really should be a little more experienced with that. In this case, though, I did go against trend. I was scalping on a lower time frame. I kind of dabbled on this a little bit about like how you can use a higher time frames bias and a retracement, like targeting retracement levels. So like say you have a really strong trend in one direction on a higher time frame, the market's always retracing and has to do that in order to move and create structure. So you can drop to a lower time frame and sometimes scalp those retracements, but you really should be experienced in it. You really need to understand like Fibonacci retracement levels and like targeting certain numbers, zones, like things like that. So definitely not suggested for newer traders. Just stick with trading with the overall trend. But for those of you who are looking to do a little more like advanced stuff, like slightly more advanced, kind of going against trend and looking for opportunities to scalp on those retracement days that maybe they're not going with the actual overall trend and they're still retracing, then this would be a setup that maybe you would be interested in. So I am here on US30. It is the 1 minute time frame. I do tend to use the smaller time frames as far as like an entry, one with Strategy Wars in general, because I like to get my point for the day and get out. But I also like to use the smaller time frames, like a 1 minute when I'm looking for retracements, because you can usually get smaller moves out of it. Like what I mean, like you don't need as big of a move to make an impact. And when you're doing something like going against trend, you really don't want to be like shooting for the stars. You know you're going against trend. You need to kind of like accept that. And you're not going to sit here and go for like an insane risk to reward. You really want to try and be mindful of it. The reason I like the smaller time frames though is sometimes if you're getting like a nice market structure like we have in this example, you can sometimes find a nice stop loss, which would give you a little bit better risk to reward. And then using a 1 minute time frame or something smaller like that, your zones are much smaller. So it's not like as hard to get to that area if you're using a 1 minute time frame versus like using a 1 hour level and also using a 1 hour entry. I don't know if I lost you guys there, but if I did, don't worry about it too much. Like, for the people who are looking to trade this, what I mean by that is like using a 1 hour level, but being able to like drop to the 1 minute and getting in sooner, getting a tighter stop loss, and then still targeting like a 1 hour level is good. But like a 1 minute just going to be able to give you a better risk to reward sometimes than like using the 1 hour, for instance, for everything. All right, so let's look at the actual trade. What you'll see here is that I had some really good market structure forming. Keep in mind that like during the time where this market structure is forming, because there's like other entries that looked really nice, I personally just am not around to trade. Like I'm not up at 5, 6, 6:30. Like I'm not around at these times to be getting into the market. Even 7 is like super early for me, but it just happened to be that this day I was around at that time to be trading, and I kind of had to trade a little bit prior to opening because of my schedule. So something like this day, for example, if I had to only trade at 7 a.m., typically on my normal schedule, I probably would just skip that day and say I'm not trading that day. But since this is Strategy Wars and I like to compete and I'm in the competition and I want to be able to like show up for my teams, I was pushing myself to trade at 7 a.m. So just keep that in mind. So when I came into the market, what I had seen was that we had really nice market structure being formed. I did know that there was a stronger overall bearish trend on US30. We've been talking about it for the last few videos. That's no surprise. The overall stronger trend has been bearish. And on occasion, I have been taking like this scalping the retracements of it. So in this case, that's what kind of happened this day. I had noticed that the momentum had died off as far as the bearish trend went, started creating new market structure, started getting new higher highs and another higher high. And then like with that were our little pullbacks. So typical market structure that you're seeing where you have like step pattern being created. So that made me very interested and intrigued to be able to get in. Normally in this case, I did get in a little early again. Like I said, I was kind of probably rushing this trade a bit more than I should have. You really should have waited to see and make a little bit of a new higher high, like break out of this area. I did probably gun it a little bit here because I did get in around this area, but I was pretty confident in this move and the retracement. So I didn't want to miss out on it. And I was looking to target a certain level. So I really wanted to make sure that I got like a good stop loss out of it and was going to get enough of a reward that I liked out of it. So I did get in a little earlier, but again, I was pretty confident because I had already created structure multiple times and I didn't see any dying off of the momentum. So I was okay to get in. And again, the next candle, 1 minute later, I get the upright smiley face kind of confirming that momentum is still in my favor. So I entered in this trade. My stop loss was slightly below. I didn't want to go this tight. I felt like this was a really tight stop loss. It would have worked out, but I just wasn't really trying to keep that tight of a stop loss. I wanted to give it a little more room in case it needed it. So I did come just below right here. I did target a 1 hour level. I've talked about this number, I think like 3 or 4 times now on videos. This 3,800 number just like kept coming up during this month. And that's pretty common. And it's something that I will see a lot. So if you see a number that just like keeps being drawn to it, go for it. If it's in your vicinity and your zone, go for it. Because I find that happens a lot for me. So I believe like the actual zone might have been a little bit higher, but I had seen 3,800 and I was like, no, I'm going for 3,800 because I knew from the last few videos, if you guys have watched them, and the prior days that 3,800 was a number that like it just kept going to, an area that it kept getting drawn to, and it's a nice even round bank number. So I wanted to target that as my take profit. And it did fall within my 1 hour level that was to the left. So that did allow me to go for a 3R. It was slightly over. I talked about this before. You'll see here. It was a 3R for me. I'm on a 50K account. It was slightly over because I've talked about like sometimes like when I'm putting in my risk, it's not set exactly to 38,000, like doesn't calculate it exactly perfect for me. So sometimes it's a little over, maybe it's like slightly under, but it's always like within the vicinity. So for me, I was like shooting for roughly a 1 to 3R on a 50K account, which is what I got there. So yeah, that was this trade here. And yeah, my stop loss was just meant to go under the zone after the market had already like been making structure. So just went under the lowest structure that I have, that most current lower structure. And then my take profit was targeting the bank number that fell within my 1 hour level that was to the left. And the whole point of this was to just target that retracement that I knew was happening based off of the stronger bearish move that had been happening the prior day or previous days. So I wasn't looking to like hold this forever or go crazy or even honestly go beyond that 30,000 level. I just didn't think it would be worth it. So yeah, that was this trade here. I hope that one helps you. Again, just make sure that you are only doing this if you're like experienced with counter trend trading. This is definitely a riskier setup to take. And if you are, taking it a little bit later on, like kind of how I did, definitely be careful with your levels. Make sure you're really targeting something that makes sense. You're using a much higher time frames level, because a 1 minute level probably wouldn't hold quite as strong as this 1 hour level did. So make sure that there's like something that the market should be going to and being attracted to that's maybe on a higher time frame, just to kind of help push your trade a little bit more. That's kind of another thing I could maybe give you. Like, I wouldn't probably have taken this and up to this level if it was only a 1 minute level, just because like they don't always hold as strong as something that's maybe on a 15 minute or higher. Otherwise, I think that's it for this trade. And I hope that was helpful. And I will see you guys in the next video. Bye.